Let's just jump right into this explainer. Look, when we talk about the absolute explosion of the AI revolution, we all know Nvidia usually steals the spotlight, right? And fair enough. But there's another crucial player that is quietly serving as the vital backbone of this entire current AI infrastructure boom. They are making massive, massive waves behind the scenes in 2026, and that company is Marvell Technology. 160%. Think about that for a second. That is Marvell's explosive year-to-date stock surge in 2026. This isn't just, a minor bump in the road or a lucky quarter. It's a massive, undeniable breakout that completely establishes Marvell as an absolute powerhouse in the semiconductor space. So here's our roadmap for today. We're going to cover the 2026 stock rally, dig into their record financials and guidance, and unpack Nvidia's trillion-dollar endorsement. After that, we'll dive into their brand new memory products, check out what Wall Street analysts are targeting, and finally, weigh the risks and the overall outlook. All right, kicking things off with Section 1, the 2026 stock rally. We're really going to break down this massive August surge. Just recently, on Monday, August 17th, Marvell's shares went on an absolute tear, jumping as much as 7.8% during the trading day before finally closing up over 5.5%. So you got to ask yourself, what exactly drove this sudden, massive influx of market confidence? Well, honestly, it comes down to scale, incredible, mind-bending scale, driven by announcements just like OpenAI's new data center in Ohio. That facility boasts a capacity of 4.25 gigawatts. To put that completely into perspective for you, building out just a single gigawatt of compute infrastructure costs anywhere between $38 and $60 billion. That is a staggering amount of money, and a massive portion of that astronomical spending goes directly toward chips, memory, and networking equipment, which, as you might have guessed, is the exact infrastructure Marvell provides. And this is exactly where Marvell's specific tech shines. A recent research note from Mizuho highlighted accelerating demand for high-speed interconnect layers in AI. They specifically called out something called CPO, or co-packaged optics. Now, if you're not familiar, CPO is basically a technology that moves the optical engine right next to the switch or accelerator chip. Why does that matter? Because it drastically cuts power consumption while at the same time boosting overall bandwidth. As AI workloads absolutely explode, data centers desperately need this kind of highly efficient data movement. Actually, Mizuho also noted that advanced packaging growth, which directly benefits Marvell's custom silicon, is expected to surge by over 75% in 2027. It's huge. Okay, moving right along to Section 2, record financials and guidance. Let's look at the actual numbers behind this narrative. Because, stock hype is one thing, but back in May 2026, Marvell actually proved they have the hard financial data to back up the hype. They reported a record Q1 fiscal 2027 revenue of $2.418 billion. That is a 28% increase year over year. And it was heavily driven by their data center revenue, which by itself hit $1.83 billion. You can practically feel the internal momentum right now. Marvell's CEO, Matt Murphy, straightforwardly described the business as being on fire thanks to this surging AI data center demand. It's a pretty high-energy statement for an earnings call, but when you look at how successfully they're capturing the rapid expansion of AI infrastructure, it hits the nail right on the head. And the sheer scale of their long-term guidance, it's staggering. Just look at this growth trajectory. Marvell projects their fiscal 2027 revenue to jump about 40% to roughly $11.5 billion. And for fiscal 2028, they are forecasting a massive $16.5 billion. On top of all that, they actually expect their Ethernet switching revenue alone to completely surpass the $1 billion mark by fiscal 2028. The financial runway we are looking at here is just wow. Let's transition into Section 3, Nvidia's trillion-dollar endorsement. This perfectly frames the critical problem-solution narrative we're seeing. Think of it this way. If Nvidia is the undisputed, muscle-bound engine of AI compute, Marvell is quickly emerging as the absolutely essential solution to the connectivity bottleneck. They are the ones linking all of that incredible processing power together so it can actually run efficiently. And honestly, that brings us to one of the most exciting catalysts for Marvell this entire year. Nvidia CEO Jensen Huang, a guy who, let's remember, quite literally built a trillion-dollar empire from the ground up, publicly stated that Marvell could be the next trillion-dollar company. Having the unquestioned leader of the AI revolution step up and validate Marvell's indispensable role in the ecosystem, that is a massive market-moving endorsement. No two ways about it. Let's just quickly track how this momentum unfolded across the spring and summer of 2026, because it's a wild ride. On March 31st, Nvidia announced a strategic partnership and a massive $2 billion investment in Marvell to develop custom networking components. Fast forward to April 19th, reports start emerging of Google being in talks with Marvell for AI chips. Then, on June 2nd, riding high on Jensen Huang's massive prediction, Marvell shares surged 33%. They literally added roughly $50 billion to their valuation in a single day. And rounding out the whole shebang, June 8th saw Marvell's formal inclusion in the S&P 500. This rapid-fire sequence of events just completely cemented their elite status in the broader market. But look, the crucial point here is moving beyond just the Wall Street hype and actually looking at the cold, hard technology driving these valuations. This brings us to Section 4, New AI Memory Products. We're specifically unveiling the highly anticipated hardware lineup from the FMS 2026 conference, which was held on August 4th. At this conference, Marvell unveiled 3 key, real game-changing innovations that are fundamentally reshaping AI data centers. First up, we have the Bravera SC6. This is a PCIe 6.0 SSD controller that's explicitly designed to double inference performance. Pretty incredible, right? Then there's the Structera X, which utilizes CXL technology to help hyperscalers scale their memory completely independently from their compute. And finally, the Photonic Fabric. This is an optical interconnect solution built to seamlessly pool and share memory across the system. Put them all together, and these tools are exactly what help cloud providers generate far more tokens while staying within the exact same power footprint. Now, the core concept driving that Photonic Fabric innovation is something called memory disaggregation. Simply put, this is the ability to expand, pool, and share memory completely independent of the actual compute power. It's like separating the brain's processing power from its short-term memory banks so you can upgrade them separately. As AI workloads scale up into the stratosphere, having enough memory capacity and bandwidth is honestly just as critical as the processing power itself. Marvell's taking this highly complex data center architecture strategy and making it incredibly efficient and accessible. All right, let's step back into the financial markets with Section 5 Wall Street analyst targets, just to gauge the current consensus. We've seen the cutting-edge tech, we've seen the mega partnerships, but how are the actual financial experts reacting to Marvell's execution? To get the big picture, we're looking at data pulled from 43 different analysts. So, the takeaway? Wall Street sentiment is overwhelmingly bullish right now. Out of the analysts polled by S&P Global, we're seeing 27 buy ratings, 3 strong buy ratings, and just 7 hold ratings. The current consensus actually implies roughly a 16% upside from current levels, targeting an average price of $256.29. That is a very, very clear signal of confidence in Marvell's forward trajectory. But to give you a fully balanced view, let's contrast 2 specific analyst targets. On the higher end of the spectrum, a top-ranked analyst at UBS has set a massive $300 target. They're specifically citing Marvell's incredibly attractive position in custom silicon and optical buildouts. Now, on the more conservative side, Goldman Sachs maintains a neutral rating, but they still recently raised their target to $195 based on growing optical demand. So the crucial point to take away here is that even the most cautious estimates acknowledge the significant financial upside being generated by Marvell's custom chip deployments. Of course, no analysis is truly complete without taking a step back and looking at the full picture. Let's move into Section 6, Risks and Final Outlook, where we're going to balance all of this amazing hype with some grounded market reality. It's absolutely crucial to impartially address the objective risks and the potential downsides of such a rapid stock appreciation. Let's objectively look at the key risk factors here. First off, after a 60% run, valuations are understandably quite stretched. The stock is currently trading at a price-to-earnings ratio of around 67. Second, Marvell has very heavy exposure to AI data center spending. While that is undeniably their biggest opportunity right now, any sudden slowdown or cooling off in that specific sector would impact them disproportionately. Finally, you might have caught some headlines recently pointing out that CEO Matt Murphy sold 7,500 shares worth $1.77 million. Now, before anyone panics, for context, this sale was executed under a completely prearranged trading plan, a 10b5-1 plan, that was actually adopted way back in December 2025. Plus, he still directly owns over 780,000 shares, so it's vital to view these data points neutrally and with their full context. So, what's the very next hurdle for this high-flying stock? The immediate upcoming test is their Q2 Fiscal 2027 Earnings report, which is scheduled for August 27, 2026. Wall Street is heavily anticipating strong execution here. In fact, they're expecting to see a 35% year-over-year revenue growth. All eyes are going to be glued to this report to see if Marvell can truly sustain its fiery momentum. Which brings us right to the ultimate question. Is Marvell really the next trillion-dollar company? They are executing exceptionally well at the absolute critical intersection of custom silicon, optical connectivity, and AI infrastructure. As you digest the incredible revenue guidance, the innovative new memory products, and yes, the stretch valuations we've covered today, I leave you to weigh the risks and rewards of Jensen Huang's massive prediction. Thank you for joining me on this explainer. Keep exploring, keep questioning, and I'll see you next time.